Welcome back to Turning Hard Times to Good Times. I'm your host, Jay Taylor, and really pleased to have with me once again John Rubino, who really doesn't need much of an introduction to most of you, I think, probably know John. He has co-authored a couple of books with James Turk, who's also been on this show a number of times, The Collapse of the Dollar and How to Profit from It, and then more recently, The Money Bubble, What to Do Before It Pops, and you can avail yourself to, or at least gain access to purchasing those books at dollarcollapse.com, and also catch up with a lot of the things that John writes on a regular basis at dollarcollapse.com. Also a lot of other very interesting articles posted at that site. So I would suggest that those of you listening may certainly want to check out John's website. Welcome, John. It's good to have you with me again. Good to be back, Jay. You know, it's a really interesting title of a missive you wrote a few days ago, and it was titled, well, it was a quote. It was titled based on a quote from Warren Buffett, in which Warren Buffett said, "You only see who's swimming naked when the tide goes out." And what Buffett was referring to then, of course, was the financial markets. When the markets decline, you start to realize those quality companies as opposed to those that are essentially naked, so to speak. You said that you believe the problems that we're having now, this enormous amount of liquidity, of leverage and debt that we have now, has its roots in the 1980s when we got too lazy and borrowed too much money. Could you explain?
Sure. Well, actually, you could go back to the 1970s when we took the dollar off the last vestiges of the gold standard, and call that the roots of our troubles. But statistically, it was in the 1980s that we really started living beyond our means. You know, and that is a normal thing for a rich society that has seen mostly good times for a while. That we just get lazy. You know, human nature is such that. If you've been winning the Super Bowl year after year, you tend not to win it in the following year because you get lazy, you don't work as hard as you used to. And that was America beginning in the 1980s. We started borrowing huge amounts of money, and then that led the federal government to have to print huge numbers of dollars in order to finance our increasing debts. And so the basic fundamental tenet that underlies, I think, Austrian economics and any kind of common sense when you're looking at an economy is that easy money leads to malinvestment. In other words, if people are willing to give you money for basically anything you want to do, you'll do a lot of stupid stuff. Mm-hmm. And so that's really been true for the U.S. since the 1980s. And by virtue of the U.S. being the most powerful economy in the world, it's been true of the rest of the world too. Basically, we were willing to buy anything from the rest of the world with borrowed money, and that led China, who was the main producer of basically cheap junk back in the day, to embark on an infrastructure spending binge that is epic. We've never seen anything like this, what China did in the last 20 years. And in the process, they bid up the prices of raw materials around the world. And so easy money beginning in the U.S. basically flowed around the world and caused people to build overcapacity in iron ore and copper and shale oil recently in the U.S. and the big container ships that were necessary to move all this stuff around the world. All of that got grossly overbuilt. And so now we're seeing the U.S. run out of borrowing capacity and China run out of borrowing capacity, and everybody's kind of trying to pull back. The amount of debt we can take on to do things like build new roads and bridges and airports, and in China's case, entire cities, is there's less of it than there used to be. And so the price of all of this stuff is going down. And so now, in effect, the tide is going out. The tide of easy money has gone out. And we're seeing a lot of really ugly naked bodies on the beach. And, among them, the one that's most in the news right now is the U.S. shale oil sector. Mm-hmm. That was the big bubble in the U.S. that replaced basically the mortgage bubble of the previous decade, where, if you had an option on some land in one of the Dakotas, for instance, you could borrow as much money as you wanted to and stick oil wells there, or oil rigs there. and people would lend you as much as it took. And so that's what happened. You had this huge boom, mostly financed by junk bonds, and now about 170 billion energy-related junk bonds are outstanding, and a lot of them are going to go bust in the next year if oil prices stay at the current price, which it looks like they're still falling today. So they could be a lot lower a few months from now than they are today.
Yeah,
and
saw $48 oil earlier today, WTI, and
and that's down from 100 and some. 8 months ago, right?
Sure.
So that's a huge drop, and it's a safe bet that a lot of the junk bonds that were issued in the last year assumed oil of $100 a barrel or more. And so, in effect, the cash flow that underpins the value of these bonds has been cut in half. And so that means the value of these bonds is going to plunge, or it's already plunged, but some of them are going to plunge to zero. And so we'll see what that does to the U.S. economy. Is it as big as the subprime mortgage sector in terms of its impact on the rest of the economy? We'll see. It's going to be fairly serious, though. And then
I wonder, John, to what extent the money-centered banks, the too big to fail banks, are stuck in these bad loans.
They're always stuck in everything that blows up. Going back to the Asian contagion in the 1990s and continuing through long-term capital management and Mexico and Russia's default. All of that. The big banks were at the center of everything. So it's a safe bet that they are front and center for the shale oil bust as well.
So they're among those ugly bodies out there, stranded out there in the dry ocean.
Probably. We haven't seen that come out yet, but it's a safe bet that if the shale oil junk bond sector tanks, that a lot of big banks will have some serious write-offs in the next few years. That's kind of a given because these guys are so central to all the stupidity that happens in the global economy. We
were just talking to Michael Oliver, and his belief is that that's definitely what is starting to infect the equity markets, and he doesn't think there's any turning back. He thinks that we're in for quite a dive in the equity markets as a result, and he sees this exactly what you're talking about, the credit markets being infected by the lower oil price. And of course, you hear all of the talking heads, and they want to spin things in a positive way to keep people positive, and you hear them talking about how great it is to have lower oil prices and lower gas prices at the pump. Well, we'll see. I mean, maybe it is good for average Americans for a change in a way, but not so good for Wall Street.
Well, you could make the case that it's poetic justice. This is really a huge tax cut for working people in terms of percent of their income. If you're driving back and forth to work and you're making minimum wage, you just got a tax cut that added probably a couple of bucks an hour to your wages. That's a very big deal. But it's horrendous for the banks and the oil companies and the pension funds and the hedge funds that are overexposed to shale oil. So the question is, from a societal standpoint, it's not clear which one of those things is more important. But from a financial market standpoint, it's pretty clear the junk bonds are more important because that's instant instability.
And then, of course, you talk about poetic justice. Yes, I hear what you're saying, but in the end, what happens when the banks go down? They just load more debt on the taxpayer and on the average people. So
we have to talk about Citigroup and its role in the most recent banking law when we get a chance today. But absolutely. When this blows up, see, that's why I'm not so sure that the stock market, I mean, it sure feels like the beginning of a very nasty bear market, but at the same time, we've got the world's central banks and the world's governments all intervening in equity markets surreptitiously. Mm-hmm. So there's no technical reason why the U.S. can't print $1 trillion and throw it at the S&P 500 and send this thing right back up. So, these aren't markets anymore. They're just varying levels of manipulation. And so, in normal times, the oil price tanking like this and taking the energy sector down with it would give you a 15-20% stock market correction with almost automatically. And now, if it leads the governments of the world to overreact and buy too many equities, to keep things even, maybe we see a huge bull market come out of this, because you just can't know anymore, because it all depends on the decisions made by individuals behind closed doors who have unlimited power. Mm-hmm. And history shows that the more power somebody has, the dumber that they get, generally speaking.
Yeah, they can just use their brute force to get their way, and they don't have to be smart about about nature's markets any longer. They have replaced the god of the markets, or the natural law, in essence, and have decided that they are smarter than markets and they know better. Mm-hmm. So that's the philosophy that seems to be governing America right now, increasingly so. But I'd like to get back to this notion of China and the key role. So what we did, easy monetary policies, which Mr. Greenspan and then Mr. Bernanke imposed, easy credit for average people. They could buy flat-screen televisions and whatever else was made in China. Almost everything in those days, and still to a great extent, is the consumers are buying is made in China. And so we had this terrific, huge, ongoing, chronic trade deficit the United States has had since the 1970s, but it's gone dramatically higher in recent years, especially as we imported so much from China. And then China, and so where do we stand now? So China is having its own problems. China, of course, we are not able to buy from China as we were, which you stated, which is part of the reason I suppose that China is having its issues right now. Where do we go from here? What is your outlook for China? And in light also of what I think are some growing geopolitical divisions now, that are very worrisome to me. That is the Russian-Chinese cozy relationship. It seems to be getting stronger. The more sanctions that we impose on Russia, the closer Russia, out of necessity, is warming up to China. I'm reading in the New York Times yesterday also political things that are going on within China I think are very troublesome. The headlines in the New York Times yesterday, Maoist in China given new life attack, and that they are attacking dissidents. And it sounds like things are turning fairly ugly in some ways. There's a real strong anti-Western sentiment I'm gathering from reading this article, a hatred in essence for against the West that's coming out of China. All of this cannot be good for the global economy, can it be?
Jay, you just covered a book-length subject there. You know, there's a lot going on out there that really deserves an in-depth treatment if we're going to understand what's really going on in the world. But the general theme of a lot of this is that in good times, it's very easy to put your differences aside and make money. Mm-hmm. And as soon as it gets harder and harder to make money, as soon as the cycle turns down a bit, then all the old tensions bubble back up. And so you're seeing it in the BRICS countries, where they are really tired of the dollar being this dominant currency and giving the U.S. disproportionate power around the world. And the U.S. is blundering around using that power very unwisely. So they have a point. and what they're trying to do now is bypass the dollar in a lot of ways. They're cutting bilateral trade deals where they just use their own currencies to trade. Right. And, they're setting up parallel banking institutions, like parallel, something like the SWIFT settlement system in the West.
Well, they've had to in part, John, because the United States has cut Russia out of the SWIFT system.
Yeah, and what did we expect? Did we think we were omnipotent, that we could cut major countries out of the bank settlement system so their banks couldn't participate in global finance and have them not respond to it? Well, they are responding to it. They're bypassing the dollar in a lot of ways. And so, Russia and China are forming a fairly deep alliance in which their militaries are working together, and China is using its vast resources or vast financial resources to buy Russia's vast energy resources. Mm-hmm. And, they don't need the U.S. in a lot of ways. So that's terrible for us, because a big part of what we consider to be the good that we do in the world comes from the fact that everybody needs dollars. And you take that away, and U.S. power is diminished dramatically in the world, and the dollar becomes a lot less valuable eventually. Like right now, it's still the world's reserve currency, and there's a flight to quality going on because everybody else is in worse shape than us. But at the other end of this process, if a huge amount of global trade is taking place in other currencies besides the dollar, and those other currencies have proven themselves to be stable enough to be decent reserve currencies on at least a small scale, 10 or 20% of the central bank's reserves could be in yuan or yen or rubles or whatever. And that means the dollar is so much less valuable and useful than it was, and that therefore fewer dollars are going to be will need to be held by the world's central banks and trading companies. And so you'll see all of those dollars come back home, and that will be very inflationary at the time when it happens. And so we have this deflationary trough that we're going through right now. But at the other end of it is a currency crisis in which the dollar is no longer the world's sole reserve currency and no longer as in demand as it was. And meanwhile, we're continuing to increase the quantity of dollars in the world. So at some point, that imbalance comes back to bite us.
Mm-hmm. Well, it certainly seems like it should. It's interesting to note that some of our closest trading partners and closest friends, like Canada, New Zealand, Australia, have all set up bilateral currency arrangements with China as well. So that tells me that China is now in the strong enough position that they can say they want to get paid in their own currency. They don't have to take dollars anymore. So it's not only sort of the countries that we have labeled as rogue nations, which I think they're labeled as rogue because they don't want to play ball with our monetary system, but that our best friends are actually trading between their own currencies and the Chinese currency. So it's
and what's surprising about this is that it's a surprise. China is, by some measures, as big as the U.S., their economy. And they have, 1/4 or 1/5 of the world's population. So they should be central to the global economy. Everybody should be trading with them. We should be using their currency alongside the dollar because they're that big, There's no reason why it shouldn't be happening. In the U.S., for us to oppose it just makes us look stupid in the first place and leads to us losing in the long run anyhow. So
the long
we should
run,
be encouraging it.
Yeah, I think the long run is the key, and probably people are not looking at the long run, they're looking at the short run and how they can continue to print worthless units of money and use those to go buy and finance military escapades and whatever else we do. John, I'm told we only have less than 4 minutes here to go, and there's so much more to cover. One of the things that I noticed, Putin talked about how if we put sanctions against Russia, it's going to come back like a boomerang to hit us. I'm wondering if some of what's going on now in the oil patch, for example, with the ruble collapsing, it is cheap for Russia to produce oil, and they're producing more oil now than they've ever produced, from what I've understood, from what I've read recently. And, of course, they're trading with China, not in dollars, but they could be using gold. They could be using their own currencies. What are your thoughts there? Do you think this is something that might be lasting, that Putin may be getting the last laugh here on this thing?
This is such a fascinating chess match, because if you go back a couple of years, or even 1 year, the consensus in the world of global politics was that Putin was this ruthless, brilliant tactician, and the leaders in the West were pygmies by comparison. He wasn't a great guy, but he was much smarter and tougher than our guys. That was the consensus. So it shouldn't be a surprise that the U.S. and the rest of the West lashed out at him. They wanted to bring him down a couple of pegs, and they used oil as the mechanism to do that. And yeah, I don't think we thought it through completely, because we are now, because we've had such an energy boom in the last few years, we're producing a huge amount of oil. And that means we are hurt as well by falling oil prices, and we got all these junk bonds and yada yada, the stuff we talked about before. So it's already coming back to bite us. And if Russia gets through this, and in the process cuts all these other deals with other countries, and comes out at the other end stronger, then Putin is going to be that much more impressive from the point of view of real politics around the world. So he will have won. And right now the jury is still out, because Russia is kind of in turmoil but there's no reason why they can't survive it. They have they've been running trade surpluses for a long time, so they have a lot of foreign exchange reserves. They've been loading up on gold for the last couple of years, and that gold is up dramatically in ruble terms. So that was a really good investment for them. They bought gold, and now it's up 60 or 70% in domestic terms in just the last few months.
Indeed, so they preserve their purchasing power that way, just as we need to do as individuals. John, 1 minute left, so unfortunately we're out of time. Just what do you think we're going to see now with the stock market coming under pressure? I don't know where it's trading now. If it's down 126 today on the Dow, do you think Ms. Yellen is going to actually start reversing her tapering strategy here?
Well, see, that's the question. What level on the Dow causes us to panic again? Yeah. I'm going to run a contest on dollarcollapse.com pretty soon where you get an autographed book. If you pick the level of the Dow at which the U.S. government panics and reverses tapering and goes back. Oh,
what a great sport. What a great sport, John. So dollarcollapse.com, folks. Go there. Yeah. Participate in that little contest when John makes it available. But go there to read what John has to say on a very regular basis, as well as all the other commentary that's there. John, we are out of time. I'm sorry. So much more to talk to you about. We'll look to do it again sometime in the near future.
Great. Thanks, Jay.